Thank you, Linda. Hopefully everyone can hear and see Bethany and I. So great to be here. I don't know, Linda, if you, I don't know if we can share screen, if you can give, or even better. So it's terrific to be here with such a distinguished group of professionals and policymakers in the climate space. Bethany and I are representing BFA Global and working on a project at the intersection of digital finance and climate resilience, actually climate adaptation and resilience, that we are really excited to talk to you about a bit today and brief you on and take your feedback on. Bethany is going to kick us off, so I will pass the mic over to her, and then we look forward to today's conversation.
Great, thanks, Jesse. Can you hear me? Yeah, cool. Yeah, nice to be here and nice to see such great turnout for this event. So looking forward to the discussion afterwards. So as Jesse said, we're with BFA. For those of you who don't know who we are, we're a tech, data, and product innovation firm. And we traditionally focus on financial inclusion and financial health, but we've recently made our way into the climate space. And Jesse and I are both core members of BFA's climate team. So we'll jump right in to talking about this initiative, which Jesse mentioned, which is digital finance for climate resilience. So we see digital finance for climate resilience as an opportunity for public-private collaboration and investment in order to build large-scale adaptation and resilience to climate change among vulnerable populations in urban, rural, and coastal communities. We see this as such a massive opportunity because it's bringing together one of the largest sectors for innovation and startups and investment with the biggest challenge of our time. And Linda already mentioned this, the recent IPCC report. So the graph on the left is from a recent State of FinTech and Emerging Markets report that we completed along with Brighter Bridges. That shows that the fintech sector in emerging markets has really been booming over the last 5 years. Across all emerging markets, there's been an estimated $23 billion invested into fintech companies. And in Africa alone, that was 1.35 billion. And I'll mention that specifically Kenya is always in the top 3 markets for investment into fintech. So we think there's an opportunity for public and private sector to work together to catalyze what we think is a substantial market opportunity to bring together climate vulnerability and fintech, and also a substantial impact opportunity. So there's still an estimated 2 billion people digitally excluded globally, and new data from the UN estimates that there's 4 billion climate vulnerable people globally. So with digital finance for climate resilience, we think there's an opportunity to address both of these challenges and ensure holistic inclusion is complete. So we see digital finance as being a critical enabler for existing climate resilience solutions that are struggling to scale, and a component of new and innovative resilience products and services. And we think that this is the case because digital finance has what we're calling a superpower of being able to enhance the breadth, depth, and affordability of many products and services, and particularly those that can enable climate resilience. So I'll give you a few examples of what these solutions actually look like that we're excited about. So a really common example is, of course, insurance, which, although is fairly well explored and developed, the realized impact on vulnerable populations, I think, is still sort of inconclusive. We wanted to mention this example because this is the product where the private sector is probably the most highly involved in East Africa, but we really see a lot of great solutions outside of this. So we hope that the private sector can start investing a bit more broadly. Not to say that there aren't great things happening in insurance, because there are, but I think there's a lot more opportunity out there. So just a couple other examples. So we see really great solutions built out in emergency cash transfers and G2P payments to enhance resilience in the post-disaster context. And this can be enabled directly through large digital payment and mobile money channels that already exist. We see a lot of great models working on accelerating and growing access to adaptation services through pay-as-you-go financing and digital payments, such as irrigation, rainwater harvesting, and cold storage. A lot of those are focused on ag value chains and smallholder farmers. So we're always excited to hear from more innovators in the space. And I've seen coming through the chat that there's quite a few on this call. So if you have a model that you think is interesting and fits into this, we'd love to hear from you. So in order for more of these models to reach scale, we think we need to create more awareness of the urgency of the problem, which I think is starting to happen like through the recent IPCC report. We need to create space for innovation and an enabling ecosystem for scale and replication of models that work. So that's kind of the core of this work. So our goal in the lead up to COP26 has been to chart a path for how ecosystems get seeded and evolve across the 5 core industry players that you can see on the right, so that we can accelerate the ecosystem for digital finance for climate resilient solutions, so that they can reach scale of impact sooner. So we're calling this piece of work the framework for action, and it has 2 parts. So the first is some sector defining knowledge products, which we see as really critical for everyone to start using the same language and to see the opportunity in the ecosystem. And the second is an actual roadmap for key industry players that lays out actions that they can start taking immediately in order to catalyze this ecosystem and enable innovation. We're personally really excited about this work because I think it actually is really focused on action, which is something that we hear from a lot of players that has been sort of lacking in the fight against climate change. So with that introduction, I'll hand over to Jesse.
Great, thanks, Bethany. And I would just provide, because I'm seeing some of the questions coming up in the chat, which is great. It speaks to the quality of the room. This work has really evolved through sort of the intersection of a number of collaborative conversations, and draws to some degree from work that BFA Global has been leading in something called the Catalyst Fund, which is an accelerator that was established several years ago, focused primarily on sub-Saharan Africa, South Asia, and portions of Latin America, to help entrepreneurs from those geographies with excellent ideas and innovations in inclusive fintech to more quickly sort of reach scale, survive the valley of death, and the inflection point of proof of concept and capital availability, and reach scale and replication in addressing that access gap that Bethany mentioned, the 2 billion who are still, unfortunately, still excluded from access to financial inclusion. So it was a series of conversations that came from that emerged into this work around the Digital Finance for Climate Resilience framework. We are fortunate to be sort of the pointy end of the spear as BFA Global, with a task force that includes organizations like CGAP, like the Better Than Cash Alliance, like the World Resources Institute, PayPal, the UN Race to Resilience, and also in a second circle, a broader universe of stakeholders like yourselves, who we have engaged in a series of consultations, and we'll be speaking about that a little bit more, hopefully today, and perhaps getting more of you involved in some of those conversations as well. But very briefly, just to touch on how we've structured this, the work that Bethany described in the framework that we're taking with a really action-oriented focus. We've looked at sort of adjacent sectors and how they've evolved, microfinance being a good example, inclusive fintech being another, Pago being another, and how those sectors really matured across time and different stages. So we've kind of broken that down into 5 stages of development of a sector, starting from eruption, when you have a few brilliant innovators entrepreneurs, often entrepreneurs, sometimes from within policy or funding institutions, who really see an opportunity to have an impact and begin to test out ideas. And it's a froth, it's a creative, um, um, bubbling creative sort of period of time. Within elect, that moves then to frenzy, where you begin to have some early business models demonstrating potential, perhaps replicating, drawing in more entrepreneurs, and some early catalytic funders to build on those early proof of concepts, then reaching turning point where you have more maturing business models, more replication, beginning to see some private sector involvement because of the group in this room. Governments and policymakers often we've seen tend to ignore the eruption period, which sometimes can be a very good thing in terms of creating space for some of that early innovation to take place without undue risk to the broader market. But then as you move into turning point, through frenzy to turning point, more engagement from government and policymakers in terms of creating the enabling environment, bringing some structure and shape and form to an emerging sector toward synergy, when you actually begin to have established business models, perhaps some merger and acquisition activity, private sector investment, and eventually maturity. So we've seen that in other sectors. We're trying to understand from those experiences and the collective experience of all of you and other stakeholders, how to accelerate some of those positive learnings at the intersection of digital finance and climate resilience to shorten the timeframes and to increase the impact. And we're looking particularly at a focus on sort of what are the key roles of actors who can help to drive action in this type of an evolution. Where are some of the knowledge products that we can be generating and capturing in terms of real world experiences, both lessons learned, current applications, successes and failures that we're seeing in the broader marketplace, that can be shared more readily to help to inform effective action. Looking at how we tap into emerging sector events, obviously COP26 is quite a significant one, but there are a number of others that there are opportunities to build on and around to try to get more attention, more conversation, more input to this process. As Bethany stressed, the importance of critical interventions. We all know that the timeframes that we're facing are very tight, and we need to maintain a focus on action. So that is really an essential part of this framework effort, and not least, creating those key enabling environment factors. And a lot of those, it can be many influences there, from how do you get entrepreneurs who may have great ideas and innovations to kind of come in off of the sidelines to really have the confidence to begin deploying those to early funders, early investors, enablers who might be providing different types of enterprise support and other type of industry support, and very importantly, the role of government, both regulatory as a financier of products and services, as a consumer of products and services, and in terms of creating the policymaking environment that can drive and sustain action and impact. So that's a bit on how we're looking at the framework, and we'd love to get feedback from this group on that, time provided. Maybe one quick example, if we can jump to the next slide. We looked at sort of a real world example is how Pago Solar sort of emerged from sort of the precondition of the digital payment rails. Obviously, East Africa has been a global leader in creating those rails. A lot of important lessons learned around business models, both the threats and the opportunities. An example of the eruption phase was the early entry of players like Delight and Mcopa, entrepreneurs who put down the flag and said, here's an opportunity, to complement legacy energy infrastructure that is not serving the most vulnerable, the most underserved, that isn't right sized to their economic realities, we think we see a solution in building off of this existing digital payments infrastructure. That was helped in no small part by initiatives from catalytic funders. One example was the USAID Power Africa funding package, which was quite significant. Investors, early investors, IFC, Lighting Africa. Actually, I think here IFC, the investment and enabling role, they played both, might be switched. The report perhaps enabled and focused attention and opportunity awareness on Pago Solar. And that was combined with the early risk-taking capital that built on the catalytic funding. And government really provided space for those innovations to develop. In some cases, they provided some directed subsidies, particularly VAT waivers for household solar equipment and supporting infrastructure, hardware, and things of that nature. That was really important to allowing that industry to emerge. Frenzy, you saw more operators come in. There was the debt facility from CBA to Mcopa. Gogla, which is an industry group, was founded as both an investor and an enabler. GSMA and CGAP began creating further definition around the space and description so that investors, policymakers, others could have a common framework within which to act. Governments, the national utilities began to be involved in terms of partnering with some of the more proven early players in the Pago Solar space. And that drove towards the turning point where you had some acquisitions occurring, you had tokenization, which helped to facilitate the scale of the Pago businesses. You began to have securitization of receivables, which again drove further scale and replication. There was venture building, technical assistance to expand on those more proven models and refine from the tough lessons learned in some cases in the eruption and frenzy stages. And you begin to see Pago being deliberately incorporated into the national electrification plans in a number of countries, which then has started to begin the shift into synergy. And Pago is still evolving. That's why there's nothing in maturity. It's not, we don't see it yet as a mature sector. But we thought it was a good example to help describe a bit more really what we're talking about and how we're thinking about this framework definition as it relates to innovations at the intersection again of inclusive digital finance and climate adaptation and resilience. And Bethany mentioned a few. Obviously, insurance cash transfers we think is also an important one in addition to Pago for perhaps early focus and innovation. Moving right along, that can help me. We do see, particularly with this group, we would love, again, your feedback, but certainly the public sector is a critical stakeholder in this process, perhaps the critical stakeholder if we really think about the scale of the challenge that we're facing. And we understand the DF4CR is just one small piece of the puzzle in terms of providing a solution. But we do hope as we move forward with this initiative that those of you in the room and others in your network can begin to highlight this work, to talk about the framework, to talk about the roadmap, to begin to normalize the definitions and the parameters that we're developing in this collaborative effort. We do think there is important work to be done, particularly as we think about those 2 billion who are still financially excluded from the basic rails, the infrastructure rails of financial inclusion that's essential to build on for the climate adaptation and resilience objectives. We need further public sector investment efforts to build those rails, to establish that and expand that infrastructure. We've also noted in many of our conversations the importance of alignment of ministerial portfolios and action. I mean, there's obviously within the public sector in any given country, there are a number of different actors who have who each have a piece of the puzzle in terms of the responsibility for protecting the public interest, as well as driving action. We've seen some examples where even if it's informal, there can be ministerial and regulatory coordinating roundtables where those conversations can take place about what are the common objectives that the different portfolios can be focusing on and working toward together, including helping to bring in early innovators and partners, and apologies for the typo there, to help inform those conversations and help to provide inputs to national strategy development, especially given the tight timelines that we face in this crisis. Not least creating incentives, whether those might be tax policies or others, to crowd in private investors, to support local entrepreneurs, and also to help entrepreneurs technologies that might be proven in one geography to be transplanted into another where it might have impact. And not least, as we move through the eruption to frenzy stages, providing that critical space for innovation, rapid iteration. Obviously, in inclusive fintech, we've seen effective use of regulatory sandboxes and other models where you can sort of ring fence and protect the public interest, but allow innovation to take place and allow models to prove out and to find the ones that can be the most effective in delivering the solutions for the vulnerable populations that we're particularly concerned about. Those are just a few examples. I'm sure there are others that this group will highlight, and we're looking forward to that feedback. I think the last slide, where we go from here. We are working on completing that solution space mapping, developing a series of investment thesis briefs, which we hope will help to tangibly categorize what some of these solutions could look like, how various stakeholders can engage in the immediate and short term to help to drive and scale them, quantifying and qualifying investment opportunities, both for catalytic funders as well as early stage catalytic investors. Blended finance, I think, will be particularly important. This is moving on a very tight timeline, so we're hoping to get the solution maps out later this week. And in late September, we'll be producing investment theses, so those will be available. As I mentioned before, we're building around a number of industry events. The next big one is that we've identified as the Climate Week in New York. We're establishing a virtual roundtable where we intend to present the framework for action before it's formally published, get feedback, take on board the real world experiences that various stakeholders are having and how to incorporate those into the most effective possible starting point for the framework. That event will be taking place on September 15th, 10 a.m. Eastern Standard Time, 5 p.m. Ruby time. We would love to have any of you who are interested to be involved. Please send us an email if you'd like to follow up on that. We will be ultimately launching the final framework through a global webinar event. That should happen mid-October. And then, of course, around COP26, we'll be doing a number of startup showcases, panel discussions, other types of events where we'd love to get all of you and folks from your networks involved. And then beyond COP26, of course, this work will continue. This is an iterative process. We hope to have a platform that is a virtual global platform where there can be exchange, learning, and building of lessons around how to effectively move to action together in the constrained timeframes that we face in the climate crisis to really provide those adaptation and resilience tools and methodologies to the most vulnerable. So we'll look forward to continuing the conversation with all of you then. I think we'll stop there. That's our last slide, Linda. So I'd love to take questions and participate in the conversation.